Hey everyone, Couch Investor back to another video for today. So let's try and make the case on Tesla or Apple. Tesla obviously has come down tremendously in recent months. It's down 70% this year. Apple more recently has also started to come down as well. Concerns around China, iPhone productions, etc. So let's try and make the case for both companies. By the end of this video, it will be pretty clear which one I rather have. Now let's start off with the state of Apple right now. Obviously still a tremendous company, printing cash like there's no tomorrow, free cash for last 12 months, over $100 billion, return on equity 175%, gross profit margin at 43%, and then PE growth next 12 months just under 2. It is trading at a forward PE of 21 times. Remember that when we're going to look at Tesla. Because when we look at Tesla, you can see the same, let's say, pattern here. Free cash flow has been increasing just under $9 billion in the last 12 months. I expect the next quarter to be around $4 billion. Let's see what happens. Return on equity over 32%. Gross profit margin 26.6%. PE to growth next 12 months just over 1. And then if you look up here, forward PE lower than Apple. Now, easy question here. Do you think that Tesla will grow faster than Apple in the next 5 to 10 years or not? Easy question to answer. Leave it down in the comments below. I would also appreciate it if you hit that thumbs up button and subscribe if you have not. And if you want to support me on this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Make sure to check out all the other links in the pinned comment. Now, continuing on Apple here, I just want to point out some crazy stat here, but I would like to add some information. So Apple CFO, this was back in late July. Apple CFO says over 860 million paying subscribers now. Probably now it's already at the 900 million mark. Now my question is, does this calculate the ones that are only paying around $2 for iCloud? If it does, then yeah, probably this number is a bit too good to look at. But talking about services and Apple's services and obviously the privacy changes which magically pushed its ad business upwards, we'll start with this one right here. So the MLS Season Pass will debut in February 2023. Fans will be able to subscribe to MLS Season Pass on Apple TV app for just under $15 per month, or $99 per season, and Apple TV Plus subscribers can sign up at a special price of $12.99 per month and $79 per season. Of course, this will push people to just have the Apple TV Plus, again, more and more subscribers overall. Then we have a note here from Citi. So, talks about the regulatory risk could bring near-term opportunity. He recognizes that regulatory risk remains a major overhang on the stock, but he views these as headline risk rather than fundamental risk, a bit like Tesla, for example. Such headlines could provide a near-term stock pullback, which would be a buying opportunity for Apple shares. He says Apple's current market value does not reflect new product category launches. This will change with the launch of the new augmented reality virtual reality headset in 2023 and foldables in 2024. The analyst sees Apple shares trading higher and keeps a buy rating on the name with a $175 price target. Then we have another note here from Needham. So Apple's weak fundamentals to accelerate CTV ad revenue stream. Now Laura Martin cuts her 2023 EPS view to just over $6 from $6.34 on Apple amid weak macro global consumer demand trends, supply chain shortages, and growing geopolitical pressures between the US and China, which may lead to weak iPhone demand in China. The analyst adds, however, that these weak core fundamentals will accelerate the development of a CTV ad revenue stream because of its above 70% gross profit margins and its best-in-class demographics. The analyst maintained her buy rating and $170 price target on Apple. Now, of course, the main concern going into the next earnings report is how much of an impact that, lack of supply of iPhones may have impacted the company. We're not far away from earnings season, so investor will just have to wait a little bit longer. Now let's start comparing both companies, and for that we have visual aid here from the AI investor on Twitter. So Tesla versus Apple. Forward PE we've just seen, this has changed right now. So Apple at 21, Tesla 20.5. Free cash flow yield around 5% for both. Now next 5-year growth per year, Tesla around 40%, Apple around 8.73%. These are based on his own estimates, but probably this is very close to the markets as well. Now he continues by saying that Tesla should stay as this valuation if it doesn't grow anymore. That is almost impossible. Tesla long-term shareholders shouldn't be worried. It gives the opportunity to own bigger pieces of Tesla at lower price. And lastly here, if you look at the S&P 500 PE to growth valuation, so around 1.7, this market rates Tesla will grow in the next 5 years. So the price of the stock, $112 divided by 5.53, so the forward EPS, divided all of that by 1.7 equals 12%. Then he asks the question, which again is a simple answer, do we agree that Tesla will only grow at 12% in the next 5 years? I think the answer here is just a no. I think Tesla will grow earnings in the next 5 years by much more than just 12%. And at current prices, current valuation, if we just go from the valuation standpoint, of course, Tesla, Apple, to me it's pretty clear, go with Tesla. Now, of course, many might think that Tesla is a way riskier business to own than Apple, but to be honest, I would have to disagree. Even with the risk, and let's say we are conservative and Tesla will not grow 40%, let's say they grow 20%, so half of that, still much more than Apple. And again, at current valuation, makes more sense to go with Tesla than Apple, risk calculated and all. Now, with that risk comes obviously more bad news for the stock, such as the Tesla Made in China weekly insured units for the week 19 to 25 December, just under 9,000, which is again lower than last week, which was just over 10,000, which is also lower than the week before that, which was, I believe, just above 11,000. So it's now for a third straight week that these numbers are down, which leads me to a price target lowering from Wedbush. You probably heard it by now. So it went from $250 to $175, keeps an outperform rating on these shares. So the analyst says Tesla will likely miss reduced street estimates for Q4 with a softer trajectory for 2023 and thinks Q4 delivery units are now likely in the 410,000-415,000 range, down from the firm's prior 450,000 estimates and the street's number in the 435,000 range. Tesla is facing some serious macro and company-specific EV competitive headwinds into 2023 that are starting to emerge both in the US and in China. Now, of course, we will get those numbers at the start of January, then earnings report at the end of January, and most of our questions will be answered. But there's another major reason why the stock is down. So, on December 26th, there was here the media report about Tesla Shanghai Gigafactory suspension was inaccurate. This is regarding an article from Reuters that claimed that Tesla is suspending production at its Shanghai plant from Saturday. Now the plan is carrying out an annual maintenance work which starts this week. The workers who have been working hard for a year could enjoy their break during this period. Now, of course, this might be true, right? But this might be used as an excuse to hide the fact that they are maybe suspending production because of a lack of demand. Could be happening. We don't know. These are just speculations. But I think in the Tesla community, this has been discussed that they might be using this period as well, a period of maintenance, so they don't have to say that, well, we're suspending production a little bit. Again, these are just speculations. But with Tesla, it's been weeks and weeks of reports and then denial and then other reports and then more denial. Again, January will answer most, if not all, questions. And so to me, it's pretty clear. If somebody asked me and had to choose between Tesla and Apple right now, I'd go with Tesla, no questions asked. Of course, everybody has a different opinion. I'm just looking at the number, just looking at the growth potential here. For me, it's a no-brainer to go with Tesla. Of course, I'm biased since I own Tesla shares, but I'll say it every day of the week. Apple is a tremendously good company. There's a good reason why Berkshire Hathaway owns around 40% of their portfolio in Apple. Of course, I would love to hear your thoughts down in the comments below. If you enjoyed this type of videos, leave it a thumbs up and subscribe if you have not. And I'll see you all in the next one. Bye bye.